Hey, what's up, guys? Node Investor here. We got Joe in the house. S13, a lot of the Node Insiders. Welcome, everyone, on this interesting day. Another, what is this? Another weekend? Red day? Green day? We're going to look at this. We're going to look at the markets. We're going to look at a lot of things here today. It's going to be a little bit of a catch-up day for me. As you know, I have been away. We have Melissa here. Welcome, Melissa. I've been away a little bit here from the charts, from the news, from you guys. No offense, but I was, off of Twitter, off of YouTube. Took a week off. Had some family in town for one. That was already planned, even beside, before all of this, craziness came in. So I had some family in town. And then they took off, and I said, you know what? I'm just going to take the week off. Took social distanced myself from the social media and the news and the chaos. Not that I'm saying, stick your head in the sand and ignore the reality of things. That's certainly not the thing to do. But I was enjoying some great outdoors, some mountains, some streams, some hiking, some trees, some fresh air, some sunlight. All that good stuff. Now, I know that's not possible for many of you. You guys are in lockdown and quarantine. Perhaps you live in a big congested city. You're unable to do those things. But if you can, I highly recommend it. I know they're saying stay indoors, and sure, don't go to the mall or the grocery store every other hour. But enjoy a nice hike and go to the park. I had dinner at the park last night in the evening. It was just gorgeous. It was beautiful outside, especially here where I'm at. This is probably one of the nicest times of the year to be outdoors before the blazing heat hits us. And so I took advantage, and it's been good. But just back to the swing of things here, we'll be looking at the regular markets. I pretty much didn't do any trading for the last 5 or so days, but started to keep an eye on things here over the weekend when I got back to the swing of things. Looking at the charts last night, just catching up on a lot of the news, the unlimited printing, the stock markets, the chaos, Airbnbs canceling galore, and interesting times, no doubt. I'll share my thoughts on that, how to survive during this crisis, my opinion, of course, and just some thoughts in terms of what else you could do, especially for those of you that are, and I know it's many of you that are in isolation, that are in self-quarantine, and are in mandatory work from home and all of that stuff. And I know it's the large majority of people out there right now. I mean, when I was on just the streets driving around, it's eerily quiet out there. Traffic is moving, and it's just kind of quiet. But we'll get to all that here. Thanks for being here, for joining this stream here. I think I posted the link, so yeah, I did. So we are ready to rock. Let's get to it. So looking at Bitcoin here, I'm going to start with the total crypto market cap, and then I'm going to go just high level at first. I'm going to be talking, stocks. I'm going to be talking gold. I'm going to be talking all that. And then we'll do some deep diving and just some thoughts there. But I'll be sharing my opinion on what's going on with the Fed and the dollar and all that craziness over there. But let's get to it. So looking at the total BTC dominance here, I'm going to zoom out. This is the daily chart here. Coming up into this little resistance zone here. If you look left, there was this little area back here that was previously support, turned into a little bit of resistance on the way up. This is the BTC dominance, by the way. And it just continues to rally, meaning when you look at the altcoin BTC pairs, they continue to lose ground for the most part versus Bitcoin, right? Bitcoin is seeing a little bit of a bounce right now, certainly on a percentage basis, at least relative to what we've been used to for the last few months. It's a big move, but in the big scheme of things, it's a little bit of a bounce considering the massive volatility we've seen here as of late. But we're starting to bounce into this 67, 68 percentage range. So I'll continue to watch it to see how this looks here. Maybe this starts to slow down and then we get a rotation back into the alts. I expect that if the total market just continues to drop further, if Bitcoin sees another leg down after this bounce, then this dominance will continue to rise. I don't see the alts outperforming on the way down. And that's just been the case here, right? We had the nice alt rally, and then of course that all ended here as the things started to get crazy, and Bitcoin has just been gaining some dominance slowly but surely here. Not to the extent that we saw, last year, but it's certainly bouncing here a little bit after hitting that 62% on the downside. So we'll see how that continues. But looking at the total crypto market cap here, bouncing still sub $200 billion mark after briefly crossing over that $300 billion mark before the big collapse, of course. And now just a little bit of a bounce. I expect this is just a bounce, in my opinion. I don't expect to see one of these V bottoms. We could, but if that's the case, I think you need to see a little bit more sideways action, some backfilling if that's the low. But at minimum, I'm thinking we're just bouncing into some exponential resistance, some moving averages that are just really catching up. We're coming off of these very oversold conditions, and then we're going to see a little bit of a retracement potentially. We're also bouncing into little resistance here. You can see this little inverse head and shoulder that we saw form in December. January, of course, is prior resistance here, and we sliced right through that level. I mean, that wasn't even a bounce level on the way down, and now we're seeing it on the way up as a potential resistance area. So I would, not necessarily FOMO in at this point, but I'm starting to pay attention for some retests, some pullbacks. It's been crazy volatile the last few days. If you go to the 4-hour chart here, actually, let me go to the BTC chart. If you go to that 4-hour chart, in the big scheme of things, just because we were used to this small volatility here, and then when things got pretty wild, this doesn't look like a big move, but it is pretty big move, especially the volatility levels that we've seen here as of late. So, I mean, if you look at just the move from here to here, this is 4-hour candles, mind you. So in 7 4-hour candles, you saw 30% rise, and then very quickly you saw a almost 20% drop, just huge wicks all over the place. Another drop here of 12%, followed by a bounce of 16%. And so just remember what I said, well, was that a week ago, 10 days ago during the last live stream? During these times of extreme volatility, play it smaller, play it tighter, and stay away from the margin, or if you're using margin, keep it way small because you don't need it, right? You've got the big swings when plus or minus 15-20% in a day or 2 days. More than makes up for the volatility that you were looking for. Back here, yeah, maybe you need a little bit more because the moves are smaller, but this is not a normal market environment. Things are crazy, they're very reactive, you got whipsaw everywhere, and so I would just continue to heed it with caution if you're trading these markets. During the way down, technical analysis went out the door, and that's just the reality. I know people say, oh no, it stopped at the exact point where it needed to stop. No, it didn't. I mean, this was a collapse, this was a liquidity event, stops were triggered, exchanges were dumping, all kinds of stuff was going on here, and it's purely a sentiment play at that point. Now that things are starting to bounce and level out a little bit here, then yes, technical analysis starts to be a factor again, because the more time that is passes by within a range, you clearly establish some buying and support levels. I mean, it's pretty evident here. But that initial day, that first move down, it's just a guessing game. There's really nothing to base it off of. Even if you look left, I mean, you were in no man's land here, and you saw how fast those wicks happened. I mean, we were at 6K and then 5K, 4K, in no time, and then bounced back up. So during that time frame, there's no TA, there's nothing to look at other than very short-term time frames. But now that things have started to settle out, even on the 4-hour time frame, you're starting to see some ranges establish here. And you can see here this little $5,700 plus or minus range has started to look like a little bit of a retest level. You had this rally after a double bottom test down here. I mean, it's a stretch to call it a double bottom because there's a wick that goes all the way down here, but you had a retest here, then finally broke resistance. Now that 5,500 number, that's what I posted in the Slack group. At the time we were looking at this little bit of a wedge, and I said over 5,500 you could probably see a little bit of a run higher. This is what I was looking at there. Finally cracked 5,500 and saw a pretty nice little run right up to 7K, but that turned out to be some, basically daily moving averages that it started to pause at. And now we've seen the retest a couple of times, and so we had this rally or this pullback down here, and then yesterday down here starting to bounce a little bit. So from the near term, that's what I'm watching here. Horizontal level. This also lines up with this lower trend line down here that's starting to very weakly form, but it's not, it's not a strong trend line just yet. I'd be watching it. And in fact, if you start to see this bounce on lower volume and it starts to wedge higher, I'd be looking for a little bit more of a bear flag scenario on that daily chart. But for now, in the near term, right, that's a good level to be watching, that 5,700. It's starting to bounce, getting over that 6,700. Then your next big target up is mid 7K range. So, 75, 76 up to around that, 8K at the most. So, but it's been crazy. I mean, just when you think about a few days back, we were talking, sub 4,000. Holy smokes. And then 7K, I mean, back down, just amazing, crazy volatility, which is why I'm saying you don't need to over leverage yourself in this environment just yet, because the market's moving for you. You don't need to put some octane on that, if you will. But that's what I'm watching here near term. Could we see a retest of 4K or below 4K? It could. And here's what I expect would lead to that. If let me say it on the positive side. If things start to level out here in terms of the stock market and in terms of the spread of the pandemic, if it at least levels out, personally, I think the economy's toast in terms of recession and all that. I mean, that's baked in. That's going to happen. Even if everything blows over and things start to recover, there's just the reverberations of this is going to take some time to play out. But that being said, if it does start to blow over here, then I don't see a sub 4K retest. I don't see it dropping that far, because this was in the middle of the panic. This was in the middle of the liquidity event here. I would not be surprised to see a retest to the downside, but is it going to break 4K? That would surprise me if things start to level out here. Now, on the other side, if the stock market and the global economy just really collapse here and just get way worse, I don't think Bitcoin escapes. I don't think Bitcoin survives in isolation. I'm not saying it's gonna like go away like Bitcoin's done, but I'm saying I don't see it being the safe haven or the port in the storm that people expect it to be just yet. Now, keep in mind, gold is doing something similar, and I remember trading gold and silver a lot during the last financial crisis. And going into it, everybody thought the same thing. When we go into this crisis, gold's going to survive, and then we're going to have this QE printing, and there's going to be this economic collapse, and gold's going to survive the hyperinflation and all that stuff. And look at what happened to gold. I mean, gold dropped along with everything else, not that much, but it dropped along with everything, and then it took off when things started to bottom out. Now, keep in mind, the stock market, the global economy, bottomed in March of 2009, and then that's when things took off. Gold front ran that a little bit. It bottomed out in October, and then it went out to take out its old all-time highs and went on this monster run up to 1800 after trading in a sub-1,000 range for so long, finally cracking 1,000 and then just going that way. And so I expect something like that would play out for Bitcoin. And so if things got really bad for crypto and for the economy in general, then I think Bitcoin would continue to see following suit, but I think it would bottom out early and then would start to move ahead of the rest of the crowd, lead the way up, if you will, especially in light of the unlimited printing, the QE infinity. They're taking it to a whole nother level. What we saw in 2008, 2009 now looks like a warm-up compared to what we've seen just in the last 2 weeks. It's unreal the amount of just throw everything out the door in terms of any sort of financial prudence, any sort of economic norms or anything like that. And so, yeah, we very well could see a hyperinflation, an inflationary depression, which would be just unreal. But what tends to happen is because we've had such a big debt bubble, there's a good chance you'll see a deflation first before you see the actual inflation. You'll see the deflation because it's going to basically be a collapse of all of these debt instruments. You're going to see a collapse of prices. You're going to see a collapse of real estate. You'll see a collapse of a lot of just overvalued things that were very largely driven on the back of a huge debt bubble. And the government's going to do everything in their power to keep that thing inflated. You've already seen it. And so what will happen is you'll see the big shakeouts, and then you'll see the big pump. And at that point, you're going to want to hold some inflationary hedges. And what are those? Typically, there's, if you think some stocks will survive, certain companies will do okay in an inflationary environment, but many of them will get hammered pretty hard. Gold obviously is a hedge. During the deflationary phase, things that survive are forex exchanges. So right now the dollar is a port in the storm. We're seeing a deflation. Everything's running to cash, and so you're seeing this big spike in the dollar index. This is the last 2 weeks of the Dixie. You're seeing the inverse in a lot of other nations, right? Here's the Australian dollar, and you're seeing the euro and a lot of these other nations just taking a big hit as flight to the dollar happens. But then what'll happen is this will reverse, right? You'll see this big move to the upside as you get some deflation and things like bonds. And people are saying, who in their right mind would invest in a 10-year bond that trades at 1% yield? Well, put it this way. If you are a mega institution and your options are 0% return or -% return in equities or junk bonds, which you don't want to be in right now, or if the governments decide to go negative interest rates, which they probably will because most other nations are already doing that, then suddenly, if bonds are trading at a negative yield and everything else is trading at a positive or you're at a 1%, that's why people would want to do that, right? At scale, that 1% makes sense. For you and I, heck no, right? Like, I'm not going to tie up my capital for 10 years at 1%. Like, that's just insanity. And I don't need to, right? I'm not a mega conglomerate. I don't have the kind of capital that something like an Apple would, where they have literally hundreds of millions, even billions of dollars in cash, where they got to figure out what to do with that. And so that's why. But going back to the metals here, so if you look at the gold market and you look at Bitcoin here today, it's trying to bounce here a little bit. So you saw gold have a little bit of a shakedown. Remember, it was trading at nearly $1,700 here recently, pulled back down to the mid $1,400 range, which was coincidentally this little support zone back in here. And you're seeing a little bit of a bounce from that. Is it a dead cat bounce? That's the big question, right? Is it bargain hunting time? Is it that's the low, let's start looking for those hedges and start bargain hunting? Or is this just, we got a dead cat bounce in our hands and it's just going to roll over, make a new low? And that's the big question, right? And anybody that tells you they know exactly what's going to happen, it's hard to buy that in the face of great uncertainty right now with the pandemic and all that. This is not a normal financial crisis, right? This is a unique situation in the sense that you have this fear, you have this unknown that the governments and entities are trying to deal with. Do we just quarantine everybody? Is that going too far? There's no way to treat it. There's no vaccine just yet. And so there's a great unknown. And so that's what's the big, the big question mark in the formula, right? You can't model this. You can't say, oh, this is support, because there's just too much in flux right now. There's just too much that's moving on the plate, if you will, and we don't know to what extremes governments are going to take in reaction to this. Mandatory quarantines, lockdowns like we're seeing in Italy. I've got a friend in Italy who has literally been in his apartment for 2 weeks, and him and his family and their kids, with the exception of he's allowed to leave every once a week or whatever to go get some food, but that's really it. And it's just sitting there, right? And police are roaming the streets. And could we see that here? We certainly could. I think it'll happen more in bigger cities than it will in most places, but that's certainly a possibility. And at what point does the social fabric start to get crazy, right? And people start to go crazy, staying at home and running out of supplies, and the worst case scenario, right? So we don't want to go down that path, but that's going to be something we look back at here in the future when this all blows over. And it's an impossible situation. Some people are going to say, oh, the government did too much. They overreacted and they threw the economy into a depression or something, right? And just blew everything up. And other people will, and you look at the flip side, if they didn't do that, and the situation became extreme and there were millions of deaths, then people would say the opposite, right? The government didn't do enough. You guys should have locked everybody down and you could have avoided all of this, right? And so it really is an impossible situation to try to manage because it's just so new, so unprecedented. And really at the end of the day, what the governments are just trying to do is buy time. They're trying to buy some time that'll allow for them to ramp up, that'll allow for some procedures to be put in place, that'll allow for a potential vaccine to come on to the market, that just a lot of that, right? They're just trying to buy some time. And you're taking the extreme measures, and unfortunately what's going to happen is the victim is going to be the small businesses, the entrepreneurs of the world, you and I. People are going to start losing jobs, and that's a major concern, right? Because you're talking, it's a domino effect, right? It's the travel industry gets hit, and restaurants are getting hit, and you got these individuals who are already barely making ends meet, working low-paying jobs, and a lot of that, or working 2 jobs sometimes, and now they're basically being told, sorry, like stay home. And what do those people do, right? I mean, that gets very dire very quick. And yeah, the big companies, the Apples of the world, will survive, but at what cost, right? I mean, that's the big thing there. And so, yeah, it's a tough situation. But you look at the stock market, and things are very, very extremely oversold here in the near term. But there's been no bounce. I mean, every day that it's tried to bounce here has been met with basically the next day selling off. Then you get a bounce, and the next day selling off. Then you get a bounce. At what point do we bounce? I do expect that we'll see a bounce, but is it over yet? Or is it just going to be kind of one of these bounces that do one of these type of moves and then we roll over again? Now, personally, not to be the doom and gloom here, but that's what I'm expecting. I think that's the more likely case of, because even if things do blow over, give it 3 months when earnings start coming out, 6 months, and companies are just reporting these insane losses, and it's just going to be bad news upon bad news. And I think you're going to see this roll over for some time before things settle out. I'm not that optimistic in terms of QE infinity. It's going to solve all of our problems. I'm just not there yet. So, and it's too bad. But look at some things that are limited. So there's a question, what's a good hedge during inflation? And if you're just joining, my thoughts are we could see deflation first and then the inflation. We're seeing the early stages of the deflation, right? The debt bubble popping. You're going to see prices dropping. You're going to see automobile prices, slowing down, and real estate absolutely has peaked at this point. And there's just going to be too much supply on the market and all that stuff. But then it'll reverse very quickly, especially if governments lose control over the currency stability and, this crazy QE just breaks everything. And then you get that inflationary cycle where there is just, there's no trust in the government. The problem is right now, I don't see that happening yet, because what's your alternative, right? Yeah, people are printing QE, and we're already have been off of any sort of gold-backed dollar or anything like that. So it's not like it matters. It's already been, a paper economy, a fake economy. Even things like runs on the bank are less likely right now, because sure, go run on the bank. You'll be surprised at what the government can do in the name of national security. And they can just basically mandate nobody use cash because it's dirty and has stuff on it. Just use your debit card, and we're going to backstop all the banks. Everything's digital, right? I mean, cash transactions only account for less than 10% of all transactions anyway. And so it's all digital. Why would anybody run on the bank? As long as you can open up your bank statement online and say, oh yeah, my money's still there, use your debit card. And so I just don't see it, right? I don't see that scenario playing out like it did in the 20s and the 30s when, yeah, everything was cash-based. There was no electronic equivalent. And so because of that, the hyperinflation scenario, I think, is still some time away. But ultimately, if there is that scenario, then yes, I mean, the most obvious things to do are hard assets, or those with good limited quantities. We've seen some good examples already here. I don't say good examples in a good way, but we've seen some recent examples in certain nations that have experienced hyperinflation, Zimbabwe and Argentina and some of these other countries, Venezuela. And the things that have survived were hard commodities, real estate, and things that are very limited. Obviously, Bitcoin, right? There's only so much to go around, and so it makes sense. Gold, right? That keeps its store value, but it's all relative to some other country's currency, right? Right now, the U.S. dollar is the reserve currency of the world, and so if you see a hyperinflation in the dollar, where's your alternative, right? Are people going to flock to the euro? Are they going to flock to the yen? Are they going to flock to the Chinese yuan? I doubt it. But most likely the scenario is going to be they're going to flock to crypto or some sort of government issued crypto. And maybe they won't even flock to it. Maybe it'll be just forced upon the public. And that's generally the camp I'm in. I'm thinking this crisis is going to be the catalyst to solidify some of those plans that were already in place. Just very hard to do when the economy's humming along nicely and things are booming. But when there's crisis, it's very easy for governments to take advantage and overstep. And banks, you'll see central banks issuing their own cryptos here soon. You'll see a lot of that. They'll be mandated. Privacy is already a dead notion, but now it's going to get way worse. In the name of national security, in the name of health, they're going to start monitoring, tracking everything and everybody, and mobility, all that. And unfortunately, that's the situation that concerns me more. Is when we go through this and we survive this crisis, what's the aftermath going to look like? What kind of liberties will have been taken away, and all that stuff? What kind of laws will be in place now? And the world may not look the same after that. So, but for the average person, right, unless you're very wealthy and have a lot of extra cash and you need to worry about where do I park my money, then yeah, of course you're asking those questions. But for the average person, that's not going to be the concern. For the average person, the concern is going to be how do I put food on the table? How do I make my rent or mortgage payments this month? And at that point, the important things matter, right? Not do we go into hyperinflation, but do I have cash? Do I have reserves? Do I have too much of a debt load? And you're going to really not be caring about which stocks are a good buy at that point. And so, that's the reality when things get that bad. I'm not saying they're going to get that bad, but if they do, that's going to be the reality. And unfortunately, it'll be those people that are in a position with a lot of extra cash and capital on hand. They're going to be able to come in and swoop and scoop some amazing bargains, some crazy deals. And you look at some of these companies, right? Like things like Tesla that were almost $1,000 here recently. At the peak, and they bounced. Look at this bounce right off the line. Now I think I'd like to see a retest of this bounce. This is a line I drew last week, and it's amazing to see it finally bounce. Last week it bounced off this line here, and if you look left, right, this was a base here around that 360 mark, and it bounced. That was just turned out to be an interesting point. If you're like Tesla, if you think they're going to survive long term, which I think they will, then that's where you start looking at those type of things. Things that I think will continue to flourish in this environment. Things like Walmart, right? Amazon. Go to Walmart real quick. Walmart has basically flat on the year, maybe slightly down. It was actually up last week on the year. One of the few stocks that are up for the year, but just crazy, right? But you look at names like Amazon, and Amazon's bouncing back here pretty decently. Again, on the year, technically is up a little bit on the year, and that's huge relative strength compared to something, like the SPYs, which are just getting clobbered. Even Apple got clobbered, right, because of the supply chain impact and all of that stuff, and came down from $300 to $225. So, it's been tough across the board. Things like AMD, not too bad right there, but certainly got hit pretty hard. Things like Zoom, right? Everyone's on Zoom now. That's been one of the stocks that I've been trading here as of late was Zoom, and that just continues to be the Corona play, if you will. That's the technical play, other than the biomeds. But Zoom just continues to rally here, just crazy because everyone's going on Zoom. Their customer base is growing like crazy right now. And so those have been the names that I've been watching here. Moderna was one of those names here that I was playing, but it's just kind of very volatile trading. You have names like Regeneron Pharmaceuticals, where's Regeneron here? Has held up, and they're working on a vaccine, and maybe if they get that to market first, you're going to see a pop here. And so there's been some ports, right? There certainly have been places that have flourished and prospered, but they're far and few. The vast majority of names, and you see that in the S&P 500, the 500 most, the biggest companies out there, that represents the economy, has had a massive fall. And the Dow Jones, it's only 30 stocks. And you've seen it get hit even harder, but that's because of names like Boeing, right? Boeing has essentially collapsed. I mean, you look at $350 stock down to $90 in a number of weeks, just a crazy drop. Obviously, the Carnival Cruise Lines of the world, I'm thinking they go bankrupt still. So I'm not sure this is a bargain hunt. If they survive, it'll be a miracle. But you got Carnival Cruise Lines just getting hit, right? Marriott hotels getting smacked. All of them are bouncing from last week, but I'm thinking it's a little bit of a dead cat bounce. Now, some of these I think will survive, right? The Marriotts of the world and all those. And so those may turn out to be some amazing bargains if you can get them again here in the double-digit numbers. But just look at where they've come from, $150 down to $45 here in less than a month. I mean, just insane, right? The velocity of the drop has been just crazy. There's a guy here that works in my office. He's an independent financial planner and all that. And I mean, I told him, I said, I feel for you guys, man, because you guys, you don't react that fast. Generally, they move a little bit slower. They look at monthly and quarterly statements. And now people are waking up and going, what happened? Just erased 2 years of gains in a few weeks. Like, whoa. And so I feel for those guys. But yeah, I look at names like Apple, I look at Chase, right? $79 to $35, or Citigroup, excuse me. And so you look at those and just, that's just the reality, right? That's the economics of what's going on here. Oh man, Tilray, $3.78. Remember when Tilray was $300? Oh my God, what a bubble that was. And it's just been a collapse, a slow grind down, $15 down to, oh my gosh, double-digit dollars. You look at the UCO, this tracks oil here, and just smack. The housing stocks, oh my gosh, look at that. $50 down to $20, just insane. The financials, the tech. So you get the idea. There's no place to hide. What about Netflix? Everyone's streaming, right? Netflix and Disney Plus. Yeah, Netflix is bouncing here a little bit, almost flat on the year. This will be interesting if it breaks out of this base. Look at this guy right here. I mean, this will be all-time highs right over that $400 mark here. So Netflix, man. Everyone's at home streaming. So that's a good segue into what am I doing, right? What to do here during these times of social distancing and isolation. And obviously that's going to vary depending on where you at, which country, which part of the country. If you're in New York, that's a big difference than if you're in Montana or somewhere, right, where it's less populated and less congested. But just some things that, again, this is just me personal, my opinion. There's nothing, no science backing this or anything like that. But just some things that I'm doing, right? One is I'm very aware, very cognizant of the amount of time that I spend on just Twitter and social media and all that stuff, because it absolutely will affect your psyche. There's fear, and again, I'm not saying be the ostrich and just stick your head in the sand and ignore reality. That's not what I'm saying. But there's an extreme point where you can start to go the other way and just live on there and watch the news and just check your feed several times an hour. And I promise you, it's all bad news. There's nothing good out there. It's all, this is getting worse, that's getting worse. And then you mix that with people's comments and their negativity, and it just gets worse and worse and worse. So it's very easy for one to get caught up in that, and for fear to just really set in and all that stuff. It's certainly wise to be prudent and to be prepared and all that, but there's just a limit. So me, number one, that's what I've been doing. That's partly the reason I took last week off and just said, I know what's going on out there. I don't need to trade every single day. And you know, let's take some time. Let's, you know, check the Twitter sphere much less often. And for one, I don't watch the news anyway. I'm not one of those local news type of guys. I don't have the TV on all day. I mean, it's pretty rare. In general, it's very rare that I'm watching just kind of local television and news anyway. And so, but if you do, and I know like my dad, he like lives on the news. Just kind of be mindful of that because it's all very scary right now and negative and so that's the first thing. The other thing is I'm doing something. You know, if you've got time on your hands, obviously you're probably worried about finances and all that. But if you're just sitting around and you have time, instead of checking the news and doing all that stuff every 5 minutes, use this time wisely to do some skill building. Man, there are some amazing tools that we have at our disposal in this day and age where you can literally learn just about anything online. You know, you can do it for free on YouTube. There's tutorials galore for just about anything you want to do, especially anything technical. If you're looking to code, if you're a creative type, all that stuff. Heck, you can learn to play the guitar, right? I mean, there's so much you can do. You can do Udemy. I'm a huge fan of Udemy. I've got an enormous library on there, video courses. And I mean, heck, even books and all that stuff. You can buy them on Amazon. So there's just a lot of things that you can do. I would highly recommend doing some personal learning, personal growth, and not just because, hey, it's a good thing to do. You're smart. You're taking your time wisely, but it also helps you psychologically. And it's been proven that, you know, as individuals who are creative in general by nature, by design, we flourish when we're growing. When we're learning, when we feel like we're accomplishing something. And if you're not at work, you don't feel like you're doing much, you don't feel productive, you don't feel like you're accomplishing a whole lot. And so you need to fill that vacuum, if you will, with some alternatives. Hey, I got a good idea. Why don't you go check out the Node Insiders? You want to learn some more TA, some technical analysis. There's some video courses here. I've got, I think it adds up to about 12 or 13 hours of video. Most of these courses are half an hour, but you get the idea, right? Take the time to kind of bolster up the skills a little bit, you know, learn some things here, grow a little bit, and then the other thing is just, you know, all the stuff that everybody's telling you: exercise, drink plenty of water, get your rest, you know, reach out to some loved ones, call in, check in on them, all that stuff. And we have the technology to be able to do that during this day and age, even though people are all stuck at home. And we could FaceTime and we can Skype or Zoom, and it's not gonna fill the gap, but it'll help. And until this kind of starts to blow over and we can get back to some sense of normalcy, it's never gonna get fully back to the way it was 2 months ago. Things have just changed. That's just a reality. But let's get back to some sort of sense of normalcy. But hey, thanks for being here. I know the Node Insiders are in the house. And we've got folks that have been on the Slack group, and even the Slack group has been a little quieter as usual. I mean, and I expect that. I mean, there's just, you guys are busy with other things and got other concerns, and trading is not necessarily the top priority right now. So, and I get that. But for those of you that are at home, then yeah, trading, right? You can use that as an alternative to potentially make some additional income and doing that sort of thing. Okay, so I'm going to catch up on this here. So let's go look at some crypto stuff, because I've been looking at some of these, you know, scanning the charts and kind of looking for what's bucking the trend versus Bitcoin. In general, most altcoins continue to lose ground versus Bitcoin, and you see that here in the dominance chart, just kind of bouncing here a little bit, even as the Bitcoin bounces. A lot of the alts haven't, but there's a few standouts here. So let's go through some of those charts here. One of them, I think we saw it on here, right? This one has already been moving for quite some time. Well, it was moving a lot last year. It's been basing for some time, and it finally broke out. But if we look at Monaco here, big breakouts. You can see the resistance was very defined, very clear. We had a wick attempt here in end of February, then the big rollover. But look at how quickly this one has bounced back. Again, this is potentially the crypto debit card and all that good stuff. That's a factor, but just quite the move. And again, has already been in accumulation mode here since last September. Had a good base, little shakeout, starting to take out resistance and still going. So nice little move there. Let's see, another one that I had on the list here. Let me see how it looks today here. Dash had a good little pop off the lows. Again, right into resistance. So just keep that in mind. A lot of these names, if you look left on the daily charts, just kind of bounced right into resistance. Let me make that line a little thicker for you guys to see it. There we go. And that's what we're seeing it stall out. But it's pulling right back to this moving average that's bouncing here a little bit. So I'm keeping an eye on these. They're not necessarily buys right here, but if they start to rally off this on the lower time frames and you get some volume kicking in, then that's what I'll be looking for a takeout of this level. But until then, right now everything is just kind of a wait and see type of setup here. Going back to the bot status, near term, that 4-hour bot status has been getting chopped a lot in the whipsaw. Been long, or it hasn't been long. It's basically been flat or short, flat or short. But man, that daily bot status has been short, never went flat. It's been short since 226, and that turned out to be a pretty good short there if you were following along. 226 was right there. So man, not bad. It went short, but it kind of just ate it a little bit. It got chopped here, and I remember this was a bounce right into the moving averages right here, and then after that it was just good night. Yikes. But what else here? So we got that status. I don't know what's going on with S&T. A lot of these small cap names you got to be careful with, because in this low liquidity environment, it's real easy to pump them and do a lot of stuff there. But status, for whatever reason, has been on a move. I have not kept up with this project at all, so I have no idea what's going on here, but it's been in play here as of late. Not a whole lot after that here. Swipe, whatever that is here. Let me go to the watch list here. Cure, Land, Wabi. Okay, small caps, micro caps. So we got a Wabi here. Nah, not a whole lot going on there. What about the bot status here? Anything bucking the trend on the BTC side? Let me look at this here. You've got BCH here. Daily bot's actually long, and a Dash. Daily bot is long. Everything else is flat or short. Let's go look at BCH real quick here. BCH, BTC. That's not pretty. I mean, it just really looks more like an oversold bounce more than anything. You can see this bounce into resistance here. I mean, it came down. I mean, it was a decent bounce, right? Up about 30%. But it's hitting right at the moving averages, and you're getting some, a lot of resistance showing up right there. In fact, I mean, to me, if I was, if I was trading this, I would almost be betting on a little bit of downside action with very tight stop just above, and at least looking for maybe a retest or a higher low. That'd be the trade I'd be looking at personally. Let's see here. I'm just reading the comments here, guys. Greetings, welcome everybody. Thanks for checking in. Baidu. Oh yeah, let's go look at Baidu. Yeah, if China's catching up, that's true. Baidu is. Oh, I'm in the stocks here. Sorry. Looks like maybe it's bounced here. What's the mainland China ETF? MCU, MCO. Let's see here. Mainland. Anyway, I'll check all that stuff out later. ETH, Link, and Tezos. Let's go look at those here. I'm gonna see what this one's saying. Neo, really? Neo's flat. XMR. XMR actually didn't hit a new low versus Bitcoin. Interesting. It's right at the support level, but on the daily charts, and that's really more what I'm looking at right now. Just we've had a little bit more time to let some of these moving averages catch up, so I've zoomed out. A week ago it was just all very low time frames because of the fast move. We've had some time now, so I'm kind of zooming in a little bit or zooming out a little bit. So look at Monero right at that support. It'll be interesting to see if we can crack above those moving averages and get a little bounce action there. XTZ, looking at Tezos. Oh wow, look at that. So you had the pullback, the drop here to the 618. I don't know when I drew that, but that's interesting to see that play out. And let me delete all this here. But, you know, a lot of these, it's kind of the same scenario, right? Where on the daily charts versus Bitcoin, at least, I'd like to see some taken out of these moving averages. They're all just rolling down. And this one, honestly, looks like it wants to drop another leg lower. There's not a lot of support down here, so it's basically trading back at the highs back here. If it drops below that, it's kind of just in no man's land here. You'd be, you know, it's kind of anyone's guess where you get the next drop, the next leg down. Looking at it from the dollar side, looks a little bit better, just like Bitcoin though, kind of just bouncing off into these moving averages. But above, what is that, $1.75? You know, next target's basically $2, and then, you know, you have basically this whole leg down to retrace, which is $2.50. What do I think of the Tika coins? I don't. No offense to you Tika subscribers, but I don't. You know, I mean, it's like anything else. Yeah, they certainly have their pump. You can trade them usually on the initial move, but in terms of, you know, he has some sort of brilliant research that's going to show you which coins are going to be the next big winners during the next run. Yeah, no, not happening. So, you know, you have some of those names here. For example, TNT, of course, mostly retraced that move there. CRP pretty much retraced the move after the drop. You know, RCN has held up much better than some of those other names, but, you know, it's just kind of hit or miss. Link was already a big winner before anything announced there anyway. You can see Link was already on the move. And Link is actually interesting here because Link BTC has been pulling right back to this prior highs. So I'd like to see it start to hold up in and around here and show some action from here. But again, below moving averages, certainly trending lower, losing some ground there versus Bitcoin. If you look at Link USD, of course, these charts are all just smackarood. Let me go to Coinbase here on this guy. But man, down to $1.60, $1.50 at one point, bouncing. But look at where they're bouncing right now. You want to see them take out some of these levels first. These moving averages haven't even been able to get over the daily 10 EMA yet. So that's just where we're at right now. Hello from Toronto, beautiful city, my friend. But so more blood this week. I don't know. It's tough right now. I'm thinking more chop. Is it going to be another one of those? We dropped $2,000 again, maybe, but right now the stock market feels like it wants to put in a little bit of green on the board, and I would not be surprised if you see the crypto market participate with that. And in fact, maybe it was leading the way up here. And so if you crack over this 7K, then you're looking at mid to upper 7Ks as my target, my next targets. And then after that, who knows? But right now, you know, all things being equal, it's just a tough, you know, if you miss the bounce at this point, it's kind of tough because you're right into the moving averages. Yeah, you've bounced and you're right above support here at 5,700. But where do you go from here? Is this going to be a dead cat bounce, a bear flag, or was that the retest and now we're about to go higher? And so it's definitely a tough call here. But if you know, it just depends on your time frame. On the daily chart, I'd be much more cautious. I'd like to see a little bit of a retest. On the short-term time frames, there's some opportunity, I think, because you've had this retest right here. You had the pullback, and right now you have a very clear support level that you can look at, right? And that's basically this 5,700, 5,600 level. And so anything below that, then yeah, you know, it's going to probably retest and make a higher low at 5K or something. But as long as it holds above that, so then yeah, there's a good potential that we continue to bounce. The next very clear resistance level is going to be right here. And so, you know, upper 7Ks, maybe 8,100 at the most. So there's some opportunity here on the shorter time frames. H-bar, yeah, let's go look at that guy. H-bar rolling down still here again. This is the 4-hour chart. If we go to this is the H-bar BTC. So yeah, definitely cracked below some of these. This is crazy that it had such a bounce after that move. I mean, that was a nice retest. It had that big move up, right, and then just kind of retraced that whole thing, and just it's been wild. And that's definitely a lower time frame trader there, because And those wicks on the day are just crazy. I mean, if you look at any given day, that's 30% there, that's 20%, 30%, down 18. This is 17% wide. Just some wild percentage moves, lately. So definitely want to look at the lower time frames on that bad boy. How's it looking now? RSI on the 4 hours pretty oversold, but it looks like it's rolling over. Oh, let's see here. What else do we got? Looking at the stocks again, I know some of you guys were we're looking at some names here. Let me go back to the stock market here. Before I do that, I'll do that silver chart here real quick. Looking at silver has been crazy because, I mean, it's been a laggard for a long time. I mean, if you look at the gold silver index, it just continues to, the gold silver ratio, right, just continues to hit new highs as gold was taken off. Silver was not a participant. This is a big difference from the last crisis. The last crisis, silver was actually a leader on the way up, going from single dollars up to around $20 or so before the crash, down to 8, and then all the way up to 50, and just had a tremendous rally. But after that, just has been nowhere near as strong as gold. And in fact, you look at something like platinum, there's not a lot of platinum in the world, and platinum was hitting these crazy numbers, $2,000 platinum. Even platinum's down to $600. Palladium, was already on a tear. And so the white metals, it's been mixed, right? Palladium obviously is the better one here, but has that topped? Yeah, maybe. Silver is tough. I used to be a bigger fan, but this is very much an industrial metal. And if things are going to slow down, it'll continue to lag there. It's not like it used to be where it was kind of the alternative currency, the silver to the gold. It's a hybrid now. It's not a pure currency play, whereas gold is still. Yes, gold is used industrially, but it's still primarily a reserve currency, especially to central banks, right? So, and all that. And I think if banks are going to hold an alternative, right, they're not going to hold silver. In my opinion, I think if they want gold plus some alternative, they'll go with some other commodity or they'll go with some crypto. So that's my opinion there. But gold, I still think is, if we see some inflation, obviously gold will hold up well. And you're seeing the gold stocks come back here. They were getting trashed along with the stock market, and that's usually what happens. But they've been trying to bounce back here as of late. We'll see if they can muster up some strength here. The silver stocks, not quite as much here. So it's been tough there. Looking at some of the other ones here, I'm going to go to the stock market again, see if there's anything leading the way right now. But the biggies that I watch, at least in this environment, are all the common names, right? The Apples, Amazons, Boeings of the world, and just kind of the big stalwarts that have, here's Apple, still getting hit pretty hard. Here's Microsoft. After hitting $190, right back down to $130. Will this support zone hold? This big base that it had that broke out from, is that going to hold? We'll see if that one holds. Some of the recent IPOs, oh my gosh, have been trashed. Uber, and I think if the economy does go into recession, I don't see the Ubers of the world doing well. I think you'll have an influx of drivers, people looking for work and all that. But I mean, man, holy moly, look at that rollover. It went from $39 to $14 at the lows. Yikes. Lyft continues to roll over. Was at $15 at the lows. When this guy IPO'd, it was at $86, and so let me go on a little rant. Here comes my rant. Remember when the ICO boom was threatening the reason of existence for all the venture capitalists of the world? And there's some nice guys in that camp, so this is not a personal attack. But really, what do venture capitalists do? I mean, honestly, come on. The ICOs would have been a much better way to go, but the only thing venture capitalists have done is, well, you can't invest in the companies like Lyft or Uber unless you're an accredited investor, which means, you got to be wealthy already. And two, by the time these companies do go public, most of the valuation has been sucked out by the venture capitalists. And so the retail guys that are all excited buying here and here and here, you're basically cashing out the VCs of the world, the early investors who have just made bank, and then you're buying it when it has no profits. And if this is what happens, you get dumped on. And that's the VC model, which is why there was such big pushback from the SEC, who, by the way, who do you think the SEC's best friends are? The venture capitalists of the world and all that good stuff. Taking stocks public and hoisting them on the retail public at extreme valuations after most of the value has already been sucked out. And so you get a lot of that. Now, longer term, if it's a good business model, yeah, it makes sense to start buying, but that's far and few, right? Not every company is going to turn into the next Apple or the next Google, right? A lot of times you get the IPO and it just does this, right? You get the Beyond Meats, and so I invest in IPOs and I'll buy them, but it's more of a momentum play. It's not oh man, this is going to IPO and quadruple from here. Sometimes they do, but generally they don't. And so you just tend to see that. So just be careful. There's some that work, but it's like anything else. You just got to be careful. Let's see here. What were some of these other China names? IQ. Q got smacked there. We already saw the MJ sector. Tesla. Here's Google. Man, oh man, Google. What kind of a percentage drop was that? 32% drop on Google. Alibaba Holdings down 24%, potentially forming a little double bottom on that daily chart. Square Cash, a lot of small businesses, so they're getting hit there. Let's see if that one works out. Etsy drops from $63 down to $29. CyberArk, there's a cybersecurity company, down 46%. Match.com, Disney, yeah. You figure Disney's primary business model. I know they're a media company, but they have a lot of exposure to travel, their resorts, their hotels, their cruise lines. Who's going to want to go on those now? So, all right. So my thoughts on the Fed before I go and wrap up. QE Infinity. You've seen just unprecedented news just with the Fed and the dollar and all that. The fact that the dollar is reacting positively to that is very interesting. You're seeing you've seen this dollar just rally in light of unprecedented, repo backstops and printing and stimulus attempts. And so that's just very interesting. So you're seeing the dollar take out most other currencies. I think it's gotten a little too far too fast, in my opinion. I think you'll get a little bit of a reaction. And so, if you're a Forex trader, maybe some of the big cap, but the majors, the euro, the yen, maybe even the pound, who's been smashed pretty hard here versus the dollar. The pound's a little bit different story, but maybe the euro, those type of things, right? You could get a little bit of a bounce back here, but then after that, what, right? Does it bounce or does it keep going? It's just the crazy volatility that we've seen here. Here's the yen. Yen took a pretty good hit versus dollar, and now it's starting to take off, which is what you generally expected. Usually the yen's a little bit of a safe haven currency, and you saw the opposite, but it's starting to bounce back here pretty quick. So we've seen the shakeout. There's some potential bargains out there in a lot of names, but I think you got to be very picky right now, because it's not one of those like in the bottom of the 08-09 crisis where it was literally you could just go scoop anything up and you probably did okay. I don't think we're there yet. I think we're still early. Some names will bounce back and be much more resilient, faster, but other ones will take time to recover from the shock. And so I don't think we're quite there yet. Names like MGM and those kind of names, yeah, I think they're going to they got hit hard on the cash flows. They're going to be suffering for a little while, right? To the gaming stocks, Las Vegas Sands, those ones, it's going to be tough. But, I mean, the valuations, though, have just come off significantly already. So maybe that was it, right? They're down 52% from $70 down to $33. So just some pretty wild moves here. But going back to the BTC longer term, again, if I had to pick any crypto to be in, it would be Bitcoin for the longer term, because it has the supply curve, which is its biggest benefit. The fact that there really is only a limited quantity, and if this truly becomes, and I don't think it will, but if it truly becomes one of those digital gold safe haven reserve currencies of the internet world, then people are going to want that. Now, I still think it'll benefit, but I don't expect it to become that. I think central bankers will issue their own currencies first and use that and force people to start using that. But this is certainly its independent thing, and I think longer term it'll hold up. But this is interesting though, because people said, oh man, it should have been the safe haven, it should have held up during this big pullback, and it didn't. But kind of just depends on how it recovers from here. Does it bounce? Right now technically it looks pretty broken, but in 2 or 3 weeks it could look totally different if we get a very strong reaction to Bitcoin responding to some of this unlimited quantity and unlimited stimulus and all that stuff. But that's not until, at least in my opinion, that's not until Bitcoin getting back over 8-9K, because that would completely undo the panic drop. If it did that and just very quickly got back over this 8-9K level, that would be uber bullish for Bitcoin here. But I think it's got some work to do. So let's see here. Phantom, there's a name from yesteryear. Phantom, my oh my, Phantom. Yeah, I don't know. I mean, this is a project I haven't followed lately. I mean, I know what they do, and it was one I was watching back in the day when they were on Bittrex still. But yeah, just that was Factum. This is Phantom, sorry. But yikes! I mean, the trend is your friend, and right now it's certainly dropping. Here you had a little opportunity to kind of buck this trend, but of course, once it broke back below moving averages, you get this bearish crossover. That was it, and it's just every bounce so far has been right into those moving averages, and just has not turned the tide just yet. But man, some of these guys are dropping so far. Larks, remember this guy was on fire here. Interesting. It's right at support. To me, it looks like a descending triangle about to crack lower, but it's kind of in a zone here where this could be the retest. So what I'd like to see, let me zoom in here. This looks like a descending triangle to me, but if it decides to take out this trend line to the upside, looks much more positive, especially if it happens right here above support. We'll pass on that one here. So, okay, guys. Hey, well, I've been going for just about an hour. And so thanks for being here. I'm going to go ahead and wrap it up there. And again, I appreciate the streams and the comments and all that. I hope I wasn't too bearish. I'm just trying to be candid with everybody. Kind of getting back from a break here. So I'll be back into the swing of things, keeping an eye on the markets and probably doing some trading myself as well, getting back into things. So I'll be posting some updates as is appropriate. But for now, my general approach right now, just kind of all around, has just been take it slower. I mean, that's just been my personal approach, just kind of moving it a little bit slower, letting things play out, not over trading. If I do a few trades too much in one day, then I'll just kind of pause for a day or two, just letting things play out, because right now it's just all over the place, and it's tough. It's definitely tough to read right now. So, and that's anything, that's stocks, that's crypto, that's everything. So just be mindful of that, and I wish you guys all the best. I wish you good health and peace of mind during this time, and I hope you get to get some time away as well and do some growing and some learning and some reconnecting with some family, even if it's virtually. And so we'll see you all in the next one. Talk to you guys then.